So, according to Yahoo Finance, the Federal Reserve in 2024 is expected to cut interest rates a total of 6 times. Now, what exactly does this mean for the overall stock market? So, let me go ahead and start sharing my screen so you guys can see exactly what it is that I'm looking at. Yahoo Finance article says the Federal Reserve will cut interest rates 6 times in 2024 as the economy shows clear signs of cooling down. So, the really interesting thing about this article is that it pretty much says that there is an expectation, right, according to one of these market analysts, because of how the job market is cooling down, that they believe. So it says Knightley says that he expects the Federal Reserve will start cutting interest rates in the second quarter of next year, which is 2024, delivering as many as 6 quarter basis points cuts, a total of 150 basis points. He also said that he expects interest rates to cut down and extend into 2025 with at least 4 25 basis points interest rate cuts. Meanwhile, futures markets suggest that the Federal Reserve will cut rates by 125 basis points. So again, this is just an analyst saying this, but the thing that I find really interesting about this is a lot of people are talking about that in early 2024, as early as the second quarter, that the Federal Reserve can begin to cut rates. I wanted to show you what happens when the Federal Reserve, based off of history, begins to cut rates. But even before we get into this, I wanted to show you one of these articles that says Powell pushes back on rate cut bets, but market pushes back even harder. So it says Wall Street responded by doubling down on Friday. As you guys saw, the NASDAQ market tried to recover, even though despite Powell's warning sign that it would be premature to conclude with confidence that we have achieved a sufficiently restrictive stance. So one of the things that you have to understand about Jerome Powell. So for those that don't know who Jerome Powell is the head of the Federal Reserve who's in charge of this monetary policy. Every single month, the Federal Reserve comes together and they decide. So on, if I'm not mistaken, December 13th will be the next FOMC meeting. They will decide, are we going to pause interest rates, meaning not raise, not cut, just pause? Are we going to raise interest rates, or are we going to cut interest rates? So based off of the previous 3 FOMC meetings, the Federal Reserve has decided to pause. This hasn't been bad for the overall market, but it hasn't been necessarily good as interest rates haven't necessarily dropped, right? The thing that I found to be very interesting is that because of his tone, Jerome Powell always puts himself in a position where it's open to whatever they want to do meeting by meeting. And this is something that he's said many, many times, is that the stock market always, again, just like it always does, anticipates things prematurely. So the Federal Reserve used to be very hawkish. This is why they were very aggressive with how they were raising interest rates. But now they're leaving themselves pretty much meeting by meeting and deciding then if they should be pausing, cutting, or raising interest rates. The thing that I found to be really interesting is looking at the history. So the surprising thing that happens to the stock market when the Fed cut rates. So this shows that with the initial announcement that the Federal Reserve was going to be cutting interest rates, we saw a huge push. And then shortly after into that day, we began to see the market sell off. And then this really gets into, I would say, more detail. So I wanted to show you this a little bit closer. And it says the S&P 500, which I would say is a good measure for overall market, right? Just the general, not NASDAQ, not Dow Jones, but just on average. So the green, so you can see right here, the green dots are corresponding to an increase of the federal fund rates. The red dots are corresponding to a decrease in the federal fund rates. And we can see that when you see the actual red dots, that is when there's an active sell-off based off of history. But it doesn't do this every single time. So the one thing that I want to show you is obviously before 2020, we see green, we see red, the markets still rallied. We see green, markets still rally. We see red, markets were still rallying. Then in the 2000s, things got pretty interesting. So we could see green. So again, what that means is that they are at that point with the green itself is that they are raising interest rates, right? So according to the federal fund rates, green dots correspond to increase of the federal fund rates. So they're raising the federal fund rates. So there we see the market begin to pull on back. But then during that, we see that they begin to cut rates, right? And during those cut rates, so all these red dots, then the market's actively selling off. Market's rallying, we're raising rates. Market selling off, we're cutting rates. So is there a correlation? Yes, to some degree. But I think I saw, it was Michael Burry, right, who is very famous for The Big Short. He talked about that there is an undeniable correlation between when the Federal Reserve, based off of history, begins to cut interest rates and the markets begin to crash. I just wanted to show you that, again, it's not just that black and white. Obviously, if the market does begin to pull on back, it'd be really nice to look back at this data and be like, okay, there is a correlation there, and looking into the future, it's something that I'll take into consideration. But obviously, nothing's going to be that black and white when it comes down to, okay, they're going to be cutting interest rates early 2024. This means that the market has to crash. I mean, when you're really thinking about it, it's supposed to just boost our economy, because it really slowed down our economy in the process when the Federal Reserve was raising interest rates, as they made it more expensive for people like you and I and businesses to borrow money. So if you're asking that general question, well, what does cutting interest rates mean? It simply means that it's going to be more affordable to borrow money. Therefore, if it's more affordable, the average person, the average consumer, businesses are more likely to then therefore spend more money, right? We should also see a correlation between mortgage rates beginning to drop. And what do you think when mortgage rates begin to drop? Well, demand should naturally begin to increase to take out these mortgages. So therefore, naturally, we should see an increase in demand for these real estate properties as well, especially if you've been seeing a slowdown. This is why you're most likely seeing a lot of your local real estate agents posting these screenshots, because they're telling you or trying to encourage you, hey, now's the time to try to buy so you can negotiate, because if interest rates do begin to drop in 2024, therefore, it's going to be a seller's market, and you're going to have less leverage to be able to negotiate, because there's going to be more buying pressure. When there's more buying pressure, more buying demand, it just makes it, I would say, more challenging for a buyer to get a good deal, because the seller has more options of a pool of larger buyers. Very, very simple. But again, it's going to be very interesting to follow up. I just found that that article to be quite interesting. You guys can let me know down in the comment section what you think of that. So again, we will be trading live tomorrow. If you guys want to tune on into our live trading session, it's going to be the second link in the description down below. But I also do want to remind you, today is the final day for our BMW M4 giveaway, and we're doing 20x entries. That means that tonight, December 3rd at midnight, is the cutoff. And if you don't enter, that means that this BMW M4 is going to someone else and not used. If you haven't entered already, right now is the final day. You're going to get automatically entered for both of the vehicles. But at the end of tonight on midnight, someone is going to be walking away with that BMW M4. All the info of whoever entered our giveaway is going to be sent on over to our sweepstakes company. They're going to select a winner, and then we will announce the winner on our social media platform. So again, fourth link in the description down below, or shoptechbuds.com. And for every $1 that you spend on the site, it will automatically enter you 20 times. You can literally buy anything. You could buy the Go F Yourself Elon Musk tee, that's 1,000 entries. Wall Street tank top, 700 entries. Nancy Pelosi Insider Trader of the Year, 800 entries. Warren Buffett, 800 entries. You can buy trading mouse pads, literally anything that you want, and it's all available at shoptechbuds.com, or the fourth link in the description down below. I appreciate you guys' time. Like always, let's make sure that we end the year on a green note. Take care, team.